Russell Jones, who's global head of fixed income for Westpac. He joins us on the line from Sydney. So, Russell, first of all, tell us what you're expecting from this payrolls figure and also from the unemployment rate today.
We're looking for about 125,000 of jobs. We're looking for a slight increase in the unemployment rate. But what I would say is that there's more than the usual degree of uncertainty around this figure today. There is usually a sort of average error around this particular statistic as much as 100,000 on payrolls. And on top of that, we've also got some extremely volatile weather patterns which have come through in the US over the last month or so. So it's frankly a bit of a crapshoot today.
Is that why there is the uncertainty, the weather?
The weather is a major consideration, yes. If you just look at the range of forecasts that have been put out there, they go from slight falls in payrolls all the way up to increases of more than 250,000. The economics community is extremely confused, and so are the markets.
Okay, well, if the number comes in around the consensus, at least that we've got for just under 150,000, that's not fast enough. That's not fast enough job creation, as Ben Bernanke says, to really, you know, push up or push down that unemployment figure. So what's it going to take to get faster job creation?
Faster economic growth is the short answer. Typically, the US economy needs to grow about 2 percentage points faster than trend to deliver a 1 percentage point fall in unemployment over 12 months. Trend growth is about 2.5%, so you need about 4.5% growth to get the unemployment rate falling consistently over a 12-month period. We're probably still a bit short of that, quite frankly. Best that we can see in the first quarter is about a 4% growth rate. And the danger is that that's about as good as it's going to get for some time. We think actually the US economy will probably slow down in the second half of the year.
So do you agree with Edmund Phelps then when he says that perhaps the new normal for the U.S. unemployment rate is about 7%?
Could well be. It's what we do know is it's going to be an awful long road back to normality, and I think that's a point that Ben Bernanke made last night, and certainly one that we'd agree with. I think resource utilization rates, especially in the labour market, are going to remain substandard for an extended period. I think that's telling you that the Federal Reserve will be very reluctant to shift monetary policy from these extraordinarily low levels of interest rates we have at the moment. And it also tells you that the inflation rate's probably going to remain uncomfortably low, at least at the core level, for an extended period as well.
Russell Jones of Westpac Banking, we've got to leave it there. Thank you very much for joining us this morning.